Hello there, Mavericks. Happy October. This is Rob Reinhold, and I'm going to be flying solo, so you just get to hear from me this week. But let's jump into the currency room. All right, let's start off with what happened last week. Probably the biggest news of the week was a breakout to new all-time highs from the Dow Jones and the S&P 500. The NASDAQ and the Russell are still below their all-time highs, but usually when one or two break out higher, the rest are fairly close to follow. The NASDAQ does have a lot of ground to make up, about 5 or 6%, but we've seen the NASDAQ go 3-4% a day before, so we'll see what happens. We did have one central bank last week, and it was a big one. The RBNZ cut rates by 50 basis points, and that was expected. So there was no surprise there, but their statement was surprising when they said the economy is growing below expectations, which means that there's room for more rate cuts, and the market was not ready for that. So the Kiwi weakened on that. It did bounce back by the end of the week, but it definitely was a little bit weak right after that report. And then cryptos really didn't do much. We'll take a look at the chart, and you'll see that Bitcoin is still looking the best, but that doesn't mean it's a buy. It's just not going down as much as others. We talked about the RBNZ. Let's talk about the Fed minutes. So the Fed minutes were kind of interesting in the fact that when they came out, the Fed minutes, they come out 2 weeks after the Fed meeting, and they basically are a ledger of what happened in that meeting. And in those meeting minutes, there was a very spirited debate of whether to do a quarter cut or a 50 basis point cut. And so spirited debate means there's probably some yelling, some shouting, some finger pointing. Anyway, we know that the 50 basis point won, but now we know that not everybody was on board, and a lot of people feel strongly. It's just showing that the Fed is less likely to cut aggressively in the future, knowing that there are some people on there that really argue against it. Thursday, we got this CPI report. Now, last week I said, even if this CPI report is hot, I don't think it's really going to matter to the equity markets. And it really didn't. They shrugged this off, but what it did do, it did matter to the dollar, and it did matter to the U.S. bonds. They went higher on this news. And then on Thursday, we got unemployment claims. This was like the worst case scenario. High inflation with low growth. That's called stagflation. Look, I don't think you need to get too concerned about this. Basically saying that more people were out of jobs than was expected with higher inflation. This is just one report. But if we keep getting higher inflation and worse job numbers, the market is going to care about that for sure. On Friday, we got GDP out of the UK as expected, so really no movement there. And Canadian jobs numbers were much better than expected, but that did not really help the CAD because the CAD was the weakest currency on the week. And then last but not least, we've got the PPI. This report came out. You can see the headline number was at 0. So you took that hot CPI number. The next morning, you got the PPI that was cooler. It really helped people say, okay, maybe that CPI report wasn't that big of a deal. So overall, the markets took in a lot of news this week and basically just kind of shrugged it off and did what I thought they were going to do and just grind higher. So as far as the numbers go, equities, they ground higher for about 1% this week. And I think that's what we're likely going to see through now till the election. Is I think we see probably 1% higher a week, and it's just grinding higher. Not a lot of velocity, not a lot of excitement, just grinding higher. Crypto, it recovered by the end of the week, but the first part of the week, it was not looking great. And gold and oil basically flat for the week. So let's take a look at the charts here. And the charts have been really, really clear. And you've heard both Onken and I say we're very bullish at the moment. We broke out to new all-time highs. We had a very orderly pullback. We had a doji candle. We had this nice confirmation candle. And I did the video on Tuesday, and I said, hey, this candle, I called it trash. This is a trash candle. And I said, we love when pullbacks are a V pullback. V pullbacks are great. We all love V pullbacks. Sometimes you get W pullbacks, and they're ugly and they're messy. But ultimately, the same thing happened. We broke out of that last swing high, and we're now on to making the next high. Now, whenever that happens, we don't know when that's going to be. There's likely going to be pullback all the way down to 57.70. So right here, right now, the market is just looking bullish. all you can say. It's just looking bullish. When we come over here to the numbers, we had a lot of staff out of town this week, so you got to hear from me a lot. And so you heard from me most of the days on the end of day videos that this is not a good trading market. And these numbers are confirming that. Take a look at most of the currencies. If you were playing euro pound, where was the opportunity to make any sort of money whatsoever? If you were playing dollar Swiss franc, they basically went up the same. Even stuff like dollar yen, there wasn't a ton of opportunity because they all kind of did the same thing. So remember, the best weeks are when we have things that are up 2% and some that are down 2%. Now we can make some money. The CAD was the worst performing currency of the week. So if you were trading CAD on the short side, that was definitely the trade of the week. But you could see, if you're trading Aussie Kiwi, there's nothing there. There was just not a lot there. I said this week on my end of day videos that these are the weeks you don't want to churn your account. You want to trade less or trade not at all, because a lot of times you get into these kind of markets and you take losses and losses. And even though they're just small, what happens is the whole time your portfolio is going down. And then what happens is when it's finally a good market, a lot of times you're too gun shy to pull the trigger because you've just taken 3 losses in a row. They weren't bad trades, it's just that the market wasn't going anywhere. So let's really focus on only trading perfect setups when there's energy. And this is just another panel here that shows you there's no energy. There's just no energy here whatsoever, flat on the week. So look, this is where I like to come on these videos and I like to be excited and say, oh my gosh, we have great markets in front of us. Let's get really excited. But you can't do that every week because, first of all, that would be dishonest because some weeks are just not good. We have a saying at Maverick, trade the market in front of you. You must admit to yourself when it's not a good market. And right now, I don't think it's a good market to be trading Forex or crypto. Are there other markets that are better? Yes. The metals markets are doing pretty good. The stock market's doing pretty good. There's other things. But as far as if you only are a Forex trader, this is absolutely one of those time periods where you should be trading less. Now let's go ahead and look at the bonds. U.S. bonds really broke out of this 3.6 to 3.9 level, and we're now back up into the 4s. As you can see, we're having a hard time going any higher, and I think that PPI helped that out. Ultimately, I think it's pretty clear that we are probably not going back down into the mid 3s. We're probably going to hang out in the 3.9 to 4.1 area, maybe up to 4.2. This is one of the reasons why the dollar has strengthened. Here is our crypto basket. And I just want to show you, and I talked about this last week. I said, look, once it failed here, we were making a nice little uptrend, came up here, based, broke out. Once we broke down this support level, it was no longer a good trading market. And last week I said, hey, look, yes, we are getting some bottoming price action, but until we do something, I'm not interested. And you can see there was a bounce. There was a bounce, and we came up here, and then we turned around and failed. Guess what? Here we are. We're seeing the same thing. We're seeing the same thing that we saw last Friday. Are there a couple bucks to be made on Bitcoin? Sure. Okay, a couple bucks at best. Is it worth putting your money out there at risk for a really low payoff trade? In my opinion, the answer is no. If we can get above maybe this point, so you can see this point was resistance right here. So again, this is our crypto basket. So we'll look at all the cryptos individually. If we can get back up above that, then I will be more interested in the trade. But until then, just not interested whatsoever. So let's look at the schedule this week and see, can we kind of plan out the days where there's likely to be big volatility because it's really in short supply here. We want to find the days when the market's moving. On Tuesday, you can see we've got employment report out of the UK. I just don't see the pound. The pound is grinding higher. You can trade pound long, but it's not going to be a fast move. I really like this CAD. So we had a drop on the CAD, but we also had better employment report. If this number turns out to be hot like the US number, I think that the Bank of Canada could back off a little bit, which should help strengthen the CAD. So for me, I like this report on Tuesday. We also have employment report out of Australia on Wednesday night. And then we have one central bank meeting this week, the ECB. They are looking to cut rates by a quarter point. Again, I don't think the ECB just hasn't really moved much lately. Unless they say something dramatically different, I don't really like this for a trade. I would much rather be trading the Canadian CPI and the Aussie employment report. Other than that, that is about it for the week. So let's go into all of the currencies individually. Let's score them from a +3 to a -3 on both trend and velocity, and that's going to tell us where to focus. Start off with the cryptos. All right, so here we have Bitcoin at a 0 and a +2 on velocity. But again, 0 tells you that you shouldn't expect there to be any big moves. If I were to look at Bitcoin right here, right now, 60,000 to 64,000 is the band. But you can see we have a couple of times it went out of that and then sucked back in. So for me, if it moves out of 64,000, I'm going to need to see at least a candle or two. And you can see if we see that, then we're heading right into resistance at 66,000. So if I had my way, it would run up to 66,000, pull back to 64,000, hold that level, and then that would be the buy point. That would be the buy point once it did that. As you can see, we're a week away on that. So with a 0 on the trend score, not interested. I will check back in next week. Bitcoin Cash, it's at a -2, which makes me even less interested in it. So I'm just going to skip through it. Ethereum, -2, not interested in that at all. If I'm going to play something, I'm going to play the thing that is relatively the strongest. We come here to Litecoin, it's at a 0 as well. So the big question is, what's stronger, Litecoin or Bitcoin? We'll check that out. We'll check that out and see what looks best on the chart. Let's go into Forex, because I think this is where the better opportunity is. The dollar is moving. The dollar's absolutely moving. And after being in a downtrend for a couple months, you can see that we have recovered, had a big run here, and now it looks like we are basing. We had a big run. These runs, pretty substantial run. I think we're going to see some basing for probably most of the week. I like dollar long. I just don't like dollar long after it had 10 up candles in a row. So I'm looking for some backing and filling. Any substantial pullback in dollar, I will be looking to buy. What I think is most likely to happen is some basing. And if that's the case, I'll just watch it. And then maybe next week we can get a breakout of that base that will make it a decent buy. So again, dollar for me is only if there's a substantial pullback. So if we see a day where there's a 1% pullback on the dollar, all of a sudden now I'm interested. If that doesn't happen, I'm just not interested in dollar. My favorite trade of the week is the yen. Now look at these candles. I liked the yen short last week. It's weak, but there's no velocity there. There is no velocity, meaning we're not getting these kind of substantial moves. Even like one candle here, we got a very, very narrow range. Okay, so all that means is we got to be ready for when it breaks down below that range to get in. But we can't get in until that happens. So I like yen short. I like it quite a bit, but I've got to be ready for it. But I can't be early, because if I'm early, then I'm just sitting in dead money. I've got to get this one correct. So we'll talk about where to put out some potential orders to grab moves. Swiss franc has been one I have been patiently waiting to break down. Once it went below its moving average here, I'm like, oh, it's just a matter of time. It's just a matter of time until it breaks down and has a fall. Well, guess what? It did not do that. It did not do anything I wanted it to do. So I just got to put it on the shelf. It's a 0 here, +2 technically, but to me, there's no velocity. There's no velocity. If I'm going to be buying a currency, I want it to have some velocity. Euro has just completed a bear rally. That's all we can call it at this point. We moved up, down, and then we came up right into moving averages. But you can see it's not selling off hard off this level. And moving averages have flattened out. It's a zero. It's a zero. Not interested in euro at the moment. All right, here we have the pound. And now the pound has made a nice little run, a breakout of this base. We broke out of this base. We pulled back a little deeper than we should have, but it recovered, but we were not able to push out and make a new high. So all that means is we're in a range. We're in a range here on pound. Yes, it's got more bullish things than others. It does have rising moving averages, which is one of the only currencies right now that has that. But the question is this the best thing we can find to buy? So pound at this point looks okay. Here is CAD, and you can see CAD had a nice rally, but just fell apart. Just absolutely fell apart. It looks more weak than strong here to me. If we could find some support, put in a bounce, it's still way too early for me. I need to see moving averages turning up before I can give it above a zero trend score. So for me, CAD is only short. CAD is only short at the first of the week. That's the only thing I can look at it. All right, up next is Aussie, and Aussie actually is a pretty good chart pattern. We broke out, made a new swing high. We pull back exactly where we should have. We had a hammer candle right as support. Here's the problem. That is a pretty lame, weak bounce. But it's probably the best bounce in the market. And that's the whole point I've been trying to make, is that the markets really aren't giving us any movement in velocity right now. It's very slow, sluggish movement. So we got a +2 on both trend and velocity. So as far as right now, this has scored the best. We come over here to the Kiwi, and the Kiwi has failed to break out to new highs, but it also failed to break down to new lows. So this is where you can take a look at Kiwi and say, you know what, I think this is in a sideways channel, which means at the bottom of the channel, you can take longs. You can absolutely take longs at the bottom of these channels, but just understand that if you get 1 or 2 days of good movement, it's probably all you're going to get. Probably all you're going to get, because we're running into resistance up here. I don't love it. I would much rather trade the Aussie than the Kiwi. But if someone said, Rob, I'm going to go with the Kiwi this week, and this is why I'm going to go with it, because it's in a range bouncing off the bottom, I would say, okay, that's fair enough logic, and I think you have a decent chance on that one. So when we look at trend scores, I just want to point out that these are all, other than the dollar looks the strongest. All of these other +2s are weak +2s. Here's the problem. The dollar had a monster run, and I think it's going to take a break this week. So now I have to be looking at these other ones. And if I have to look at them and rank them, Aussie's my favorite, pound is my second. And I'm not even looking to trade Swiss franc long. On the short side, it's yen and CAD. Yen and CAD are the two possible trades here on the trend scores. So again, the trend score is likely what's going to happen over the next couple of weeks. Velocity score is what's going to happen over the next couple of days. So when we're looking at those crosses, we see the pound is not showing us velocity right now. So at the first part of the week, I'm not going to start looking at pound trades, because I already know right now it doesn't have the velocity. What does have the velocity? Aussie and Kiwi at the moment. What has the velocity to the downside? Both CAD and yen. Both CAD and yen could absolutely be in the crosshairs. So let's go ahead and take a look at Aussie and Kiwi trades against yen and the Canadian dollar. Remember, whenever we have two strong currencies and two weak currencies, or we're trying to decide what's the strongest and weakest, we always just pair them up. So if you were to ask a question, what is stronger right here, right now? Is it the Aussie or the Kiwi? Now you can see over the last, this is a 4-hour chart, so really over the last 4 or 5 days, the Aussie-Kiwi cross has gone down, which means the Aussie is weaker than the Kiwi, And especially in the last 4 hours, we can see a pretty decent red candle. So right here, right now, it is telling you the Kiwi is actually stronger than the Aussie. And remember, we had two on the short side, both the CAD and Yen. So let's pair those up and ask the question, okay, what is stronger right now, CAD or Yen? And you can see that we have had generally a downtrend, meaning CAD overall has been weaker. But if we look right here, right now, you know what? I'm still going to say that CAD has done a little bear rally. We still have falling SAR. We still have sort of falling moving averages. They're pretty close to the same. As you can see, moving averages are flattened out, telling you it's pretty much the same here. RSI is flattened out. But if you were to go over what has been the weakest over the last couple of days, then I think you would have to say the CAD has been the weakest. Now we use this to tell us where to start hunting. So if we think that the Kiwi right now is stronger than the Aussie, and we think the CAD is weaker than the Yen, then it tells us the best pairing should be Kiwi CAD. And take a look at this chart. The chart is looking great so far off of a 4-hour chart. Let's jump into the daily chart first. All right, we've had a big pullback, and we can see that we did hold on to some support. That is a positive thing here on this cross. A negative thing about this cross is this pullback was way too big. So when you are in an uptrend, you do not want to see pullbacks that basically violate technical analysis, and that's what happened here. This last swing high, once it was broken, should have held, and it did not. So we're bouncing up here. This should be some pretty decent resistance level up here at the 84.50 area. We're at 84.16. We're like 30 pips away from what should be some pretty major resistance. Technically speaking, this is not a great trade. In the short term, though, we do have a lot of good positives. We have some good candlestick movements. We got some good candlestick movements. We have RSI crossing up above the 50. We've got the moving average starting to turn up again. Once we break this last SAR, we're going to have some good short-term signals that says, hey, this thing it's going higher for the moment. It's got some good momentum. But we all have to look at it as far as, okay, if that's the case, then how far is it going to go? And if it doesn't look like it's going to go all that far, I think you got to be very wary of a trade like this. I've got this major resistance here at 84.40. To me, this one doesn't make a lot of sense. So what I would rather see here, I'm not looking to take a position here. I want to see that 84.40 either break or another thing that would be acceptable is if we hit that 84.40 and then pull back to a support level at 83.80, then I could go ahead and possibly get long off of that bounce. Now that would give me a much bigger window of profit. You know, if I'm in it at 83.80, all of a sudden now I got 60 pips of upside. If I get in here, I've got like 20 pips of upside before it starts to run into some serious technical resistance. This is Kiwi CAD. This is where we were going to start. Now remember, we don't have to go with this one. We could go ahead and take a look at Kiwi Yen. Does Kiwi Yen look any better on a daily chart? And I would say it does look better in the fact that we don't have a lot of again, this has been a very good base. We're just basing here. So I think the entry looks better here, but the problem is there's no guarantee that this base is going to break out. There's no guarantee. Of course, there's no guarantee in any trading. So this is where you have to make a decision on a trade like this as far as, okay, I like the daily chart, but there's a whole lot of stuff it's got to get through. A whole lot of stuff. You can take positions here, but this is how I like to do this. Take a third of a position. Take a third of a position early in the week. And then if it breaks out above 92, take another third. And then if it has a nasty pullback all the way down to 91.40, you can grab your third entry. And now you've got a really good cost basis to where if it does eventually break out, you're going to have a nice trade. The problem is if you buy everything here and then it fails, you'll likely get stopped out with either a break-even small loss, or if you wait for a breakout and it fails on the breakout, then all of a sudden you've got a really terrible cost basis. So this is where I really like some pyramiding on a trade like this. So I actually do like Kiwi Yen a little bit better than Kiwi CAD. Let's go ahead and take a look at Aussie CAD. Let's see if the charts look any better on this. And to me, the chart looks much, much better on Aussie CAD. Here's why. Remember, Kiwi CAD, we had that huge pullback. This is a very good technical pullback to a level that should hold. This looks much, much better here. So for me, going through all these trades, I like this. We've got moving average that's already sloping up. We got RSI that came down to the 50 sloping up. We're just about to break through the parabolic SAR. This one to me looks good. We could have some short-term resistance at 93.50, but if it breaks through that, we should see a run up to, somewhere around the 94.50 area. 94.50, that's 150 pips on this. That to me looks good. Sorry, this is Aussie CAD, yeah. While we're here, let's throw up Aussie Yen and see if it looks any better. And you can see Aussie Yen looks very similar to Kiwi Yen, where it's really, really being pinched here. But when it breaks through that, there should be a really, really good explosion of energy. So all these trades look good. And if Yen and CAD stay weak, these trades should do well. But as far as when we look through all of them, I've got to say that Aussie CAD is the best looking one on a pure technical basis. Let's go ahead and wrap this up. Look, the market is constantly changing, and this is the outlook for the weekend. And then Monday we adjust things and we look at things and say, hey, reports are coming in. How did it change things? Don't be so rigid that all of a sudden now Aussie CAD is the only thing you're going to look at next week, but it should be pretty much the only thing you're looking at early on. And then we're going to make adjustments, and maybe the pound starts to become a little stronger, starts to be, hey, one of the things we can start to look about going long against other things. But this is where we're going to start the week off. That is it for the Currency Room. Thanks for joining me. Everyone have a great weekend. Goodbye.